Hello traders, Cousin Vinny coming to you from theclosingprint.com, April the 12th, 2020. In this edition of your weekend video newsletter, we'll discuss the indices which had a nice follow through last week, in addition to all the tech stocks that we follow closing higher. Bond stock ratio, HYG and junk are all pointing to bullish tendencies for equities, while the Dow Composite remains in a bullish wave up. S&P 1500 is beginning to turn. That could give us a buy signal soon. And the XII ARC Institutional Index finished the week on a bullish note. Tick and TICQ also moving higher. That's bullish as it shows institutions are buying more stocks on the uptick than they're selling on the downtick. Pretty simple. NYMO and NAMO, as we pointed out over the last couple of weeks, started a bullish cycle. They continue to move higher. They finished very strong on Friday with NYSE and NASI, the summation indexes for the New York Stock Exchange and the NASDAQ respectively, with a bullish cross finishing higher with breadth thrusts above plus 30%. That could be showing a sign of exhaustion and an area where we might see a little pullback as we've seen in the past. NYHL is also improving, just barely above zero. We have the S&P Equal Weight Index showing a follow-through as A50R improves more than 100% compared to the previous week. We'll discuss that in a minute. Put-call ratios neutral. VIX is fading more. Institutions, dealers, and market makers will have to cover their short put positions if that continues. As we trade in a zero gamma environment now, that is now starting to turn more positive as we head into monthly options expiration on Friday. Bonds are starting to tighten their range with the exception of AGG, which rose rapidly last week into Friday, closing at the highs. The US dollar faded from its extremes. Its range is also tightening. US dollar yen, British pound US dollar looks like it could move higher. Pairs are starting to tighten their ranges. Gold, also a huge bullish week, accelerating through a multi-top breakout condition in gold. I hope some of you traded that. Copper is rising. That's good for home builders, construction related, and building products stocks, which we'll cover in a few minutes as well. While West Texas crude remains inside of a range from last week, printing a inside week after gaining 31.75% in the previous week. Last week we started to narrow our range. Heat maps are remarkably bullish for both the S&P sectors and the international markets. We'll look at some IBD 50 names as usual, in addition to some MarketSmith relative strength stocks that showed up on the scans and the top 20 volume percent gainers. We only have 6 of those marked in green, so make sure you check those out as well. Bulkowski finished off the week 5 of 5 green with a CPI signal green since April the 1st at 72.7%. That's bullish with 27 bearish patterns, 72 bullish patterns, and 224 patterns waiting for breakout. Note this last number, 788, was the previous week where we were waiting for 788 stocks to break out. That's dropped to 224 as many of those stocks had broken out. We're cautious again this week. We're watching institutions. All the sectors, international indices appear to be bullish. In addition to starting earnings this week and having OPEX on Friday. One thing to keep in mind is that the market seems to be ignoring the bad news. That's a sure sign that suggests the markets has put in a bottom. While a retest of the lower levels are certainly a possibility, this does look good for equity bulls as we go into earnings this week. Here are the spiders. The first thing you should note this week, gamma has flipped to positive above 270, where dealers and market makers will have less of an impact on direction in the markets at the present time. We would like to see more options trading on the call side, which would lend to a more positive gamma situation. Price action stopped right at the 50% retracement. We did have a doji last week on Friday. We have major resistance overhead at 618 Fibonacci and the 200-day and 50-day moving averages just overhead. On a bullish note, we do have RSI rising above 50 and MACD is above its signal line with histogram bars printing taller bars into the end of the week. So that's more bullish than bearish going into OPEX on Friday. We have a 9 and 21 day cross as price action continues to move higher. The S&P Equal Weight Index, where no stock is more important than any other, pushed through the horizontal line here, which denotes the December 2018 low. We paused briefly there on Tuesday, followed through on Wednesday and Thursday, mounting a rally above the 382 Fibonacci with 50% just overhead. The most remarkable thing is that the number of stocks trading above their 50-period moving average moved from 12% up to 24%, showing that 24% of stocks are now trading above their 50-period moving average, a market improvement over the previous week. So our CCI trigger once again gave us a nice signal for a bullish follow-through. Now we're watching to see this overbought condition, if it embeds like it did back in June and July of last year or not. My guess is that earnings will have a big impact on whether or not we follow through. I'm thinking it's most likely that we might see something like we had here at the end of the previous week going into last week. So a little bit of a pullback would be fine. That would be a higher low. We'd look for a higher high at some point, depending on how the banks report this week, so that we can position accordingly. Longtime members are familiar with this particular chart. This is the S&P 1500 high-low percent cumulative, advancing stocks versus declining stocks. When we have more advancing stocks than declining, we turn green. And when momentum really starts to pick up, we start to see a crossover and a move to the upside. We're looking for a histogram to move above the zero line and turn green. That would be a confirmation. In addition, we want to see more green sticks. We do note the S&P 1500 lower bands and upper bands are moving away from each other. So that's telling us to anticipate a fast move to the upside, not consolidation. If these Bollinger Bands had been tightening further instead of turning outward, the latter condition would have suggested a compression of price action along this level. Instead, we have the opposite, so look for a follow-through, earnings being the biggest catalyst, of course, one way or another. If we consider what institutions are doing with the stocks that are most commonly held in their core portfolios, we do see green elder sticks, same condition with Bollinger Bands opening up. We do have major resistance overhead at the 200 period and the 50. So these commonly held stocks, as you see over in the left panel, are telling us that institutions have been buying from the lows as these high quality names that I'm sure most of you are familiar with continue to be bought up at a discount. Many of those stocks, of course, are on the NASDAQ 100. Big cap, high quality names in the biotech and growth arena that saw a 23% gain off of the lows that we saw put in 3 weeks ago, back above the 50-period moving average with a test of the 20-period overhead. RSI suggests if we cross over on this weekly time frame that we could see higher prices before being exhausted again on the weekly time frame. While volume was below what we saw in the previous week, last week was pretty good for a short holiday week. MACD is turning. Histogram should cross back above zero over the next several weeks. So again, depending on what happens with earnings this week, we could have ourselves a nice follow-through into the seasonally strongest month of the year, July, for the tech stocks. So A lot of names on the NASDAQ 100 populate that list, so I wouldn't be surprised to see the NASDAQ continue to outperform the S&P 500 in the short term. The big caveat in many professional traders' minds, as well as the financial media, remains with the small cap index, many of them populated by small cap biotech, small cap oil and gas energy names, which had a profound bounce over the last 4 weeks, 30+%, rallying through this pivot low that we saw back in December of 2018. So depending on what happens this week with small caps, RSI does suggest that we could see more upside before running into resistance on the weekly time frame. Volume was pretty significant, while MACD is starting to show shorter histogram bars headed towards the zero line. Again, depending on what earnings have to say, we could see a nice follow-through or rejection at this level over the next couple of weeks. So be mindful of small caps if you're trading any of them going into earnings. We also need to focus on the number of stocks advancing versus declining in the lower panel, while the upper panel is the simple calculation of New York Stock Exchange new highs minus new lows. So if there's more new highs than new lows, this black line, the moving average, will continue to rise. We want to see histogram remain above zero and continue climbing, while the advanced decline line should make higher highs and higher lows, continuing on its quest for higher levels. And we also want to see the New York Stock Exchange moving higher, producing green elder sticks. Blue elder sticks are fine, red would not be fine. Going into the week, we're watching earnings. There's 2,000 stocks in the composite NYA, so important enough to watch this index as well. Finally, as far as indices are concerned, the Wilshire 5000 is a broad measure of market participation. We're looking for follow-through here. Important to note that Chaikin money flow is showing bullish accumulation, while the on-balance volume is also rising. We want to see on-balance volume continue higher. MACD, the price momentum oscillator, is bullish and above its signal line, which suggests bulls are in control, and we could see further upside until we run into the 50 and 200-day overhead. That said, while most indicators that we're following are showing and suggesting a potential bullish follow-through, we do have to consider that breadth is starting to get to extremes. The S&P 500 in the top panel, mid caps, small caps, and NASDAQ in the lower panel. The upper three are above 30%. That tends to be an inflection point. In the past, that's happened, and we saw a mild pullback when gamma, again, was positive back in 2019. We've since shifted to a neutral to positive gamma situation as well. So depending on what happens with earnings and OPEX this Friday, we could see a little bit more follow through, but I'm thinking that we're getting a bit exhausted. That said, do note that NASDAQ has yet to get to the 30% line. So there's potential for, again, the NASDAQ leading this week without being overbought to start Monday trading. In addition, the NASDAQ McClellan oscillator, NAMO, shows a full bullish cycle just now pushing through zero. Looking at the black line following through the cycle that we pointed out over 3 weeks ago. Green elder sticks on the NASDAQ 100, and NASI, the summation index, gives us a full-on bullish cross headed sharply back towards the zero line, suggesting we could see more upside depending on what earnings tell us and forward guidance. We're sitting right there at the 200 period moving average, flagging, so we'd like to see another leg up, though there is a possibility that we could see a leg down first into earnings and a sharp reversal, hopefully, to the upside if breadth continues to improve. That's a lot of ifs, so the key again this week will be VIX, which finished the week on a green signal. This is the VIX 1 indicator. This flips VIX on its head so that it's moving in the same direction as the markets. When it's green, the 60-minute chart in this case suggests higher highs and higher lows, while the daily VIX continues to fade back to the 50-day moving average, sitting there presently at 40.18. There is a potential, if some catalyst comes out markets don't like, we could see another bounce. Otherwise, we could lose the 50-period moving average. That would be bullish for equities. If that continues, as we look for any remaining market makers, dealers, and institutions that have short put positions that are open, as we wait for April options to expire this Friday. Bottom line, we'll have to wait and see how the market reacts and keep an eye on VIX, as that is the key to the whole picture at the present time. So we would look for put-call ratio to continue to drop. That would suggest that there's more calls being bought. It is important to note that in order for gamma to become more positive, we want to see more calls bought. So we would like to see put-call ratio drop into the 80% level, maybe bounce around a little bit like it did back over here in 2019, while we were trending higher for the most part during the whole year. So look for put call to drop if you are bullish equities, and looking for positive gamma to improve. Here is the S&P 500 weekly time frame in the upper panel. While the bond stock ratio points lower, this is telling you to favor equities over bonds as this continues to drop, while the 20-year and shorter durations on the weekly time frame show a compression starting to narrow and getting more into line as to what we saw back in 2019 before hitting that high at 179.44. Currencies are also starting to show a narrowing of range. This big whipsaw halted over the last couple of weeks at the 21-day moving average for the British pound US dollar pair. Range is tightening now, which is telling us volatility is coming in, another signal that VIX might continue to drop as well. While other pairs like the US dollar, Japanese yen showing the same thing, big whipsaw, very large ranges over a weekly basis now starting to come back in. This sine wave or waves are starting to narrow at the 20-period moving average. Notice the Bollinger Bands are coming in. So this is another sign that we could see a slowing and a compression in volatility in the weeks ahead. While the move lower and the fade in the US dollar did have an impact on gold as it broke out above this multi-top level of resistance. RSI suggesting we could see further upside on this current wave up. If you're trading gold, GDX, etc., keep an eye on that. We have a lot of IBD 50 stocks that are showing up that look very bullish as well. We'll cover those in a few minutes. Other economically sensitive commodities, of course, like copper, a forward-looking indicator, is rising off the lows. We have a 9 and 21-day cross. That should lend to further upside, which would be bullish for home builders, construction-related names, and home building and building products construction groups. If this continues higher, which we would expect it would going into the election, and statistically speaking, the fourth year of a first-term president, typically, no matter if Democrat or Republican, does tend to outperform. So given the current situation, I wouldn't be surprised to see further upside once and if we get the coronavirus in our rearview mirror over the next several months. The caveat, of course, is crude oil, which we did see a 35% move in the previous week. Last week was an inside week, having price action stayed inside the highs and the lows, as there seems to be more petty bickering in the OPEC nations, not so happy with the agreements that Saudi Arabia and Russia are putting together. I believe Venezuela and Iran have issues, which is affecting the price of crude oil. I do have a small position in USO. We sold Oxy Petroleum on Friday morning, had a nice gain there. We'll look for some opportunities here in the crude oil patch. And if you're bullish equities, of course, you want to see crude oil moving off of these lows in the next few weeks. And of course, if you're bearish, you want to see crude oil moving lower. Sectors 3 weeks ago on 327 started to improve, moving from yellows, lime greens, and red to lime greens and chartreuse green. We saw a few last week. Then in April, we saw a further improvement into last week, which was quite remarkable, to say the least, while the international markets began to improve over the last 3 weeks as well, adding more greens to end this week, while the commodities group in the lower panel also improved. A contrary indicator of sorts, we have consumer discretionary underperforming consumer staples, which makes sense when you think about it. People are not spending money on things they don't need, so consumer discretionary as a ratio continues to underperform as this drops. We had the same condition going into late 2018 when the markets continued to move lower in October, November, and December, finally forming a low. So we need to see an improvement in consumer discretionary in the short term and get these moving averages moving in the opposite direction if you're longer term bullish in equities in your retirement account. If we look at the individual sectors, we can see interest sensitive utilities, interest sensitive real estate, staples are performing the best. As we mentioned, with the NASDAQ outperforming and having more upside relative to its weekly chart and RSI, we'd like to see technology continue to perform, get above a 50-period moving average, the red line in each case. So we're looking for the rest of these sectors to continue performing. With the big banks reporting earnings first, we'll look for financials to either get rejected at the 50-period moving average or follow through. Bottom line, all the sectors are improving, putting in higher highs and higher lows, while real estate, materials, consumer staples, and utilities outperform the rest. The majority of the names on the IBD 50 look very smart for the week. Stocks moving through their 20 and 50-day moving averages. We'd like to see the moving averages inclined. I know that's a tall order with the number of stocks above the 50-period moving average only at 24%. There's still room for improvement. Many of these growth names do show bullish setups, with Adobe showing RSI is rising through 50. An important criteria from my perspective, I'd like to see price action with buyers near the moving averages showing up, closing price action in the upper half of the daily range as another criteria or prerequisite. RSI needs to continue higher, and we want to see MACD follow through while taller histogram bars are built and volume starts to increase. So Adobe looks pretty good. Momentum looks like it's going to follow through. Bulls are in charge, so we'll look for follow through this week in Adobe. Semiconductor index ran into the 50-day moving average and saw some profit taking. So if we do have a little bit of a pullback in AMD, we'd look for a follow through off of the 9 and 21 day. You can see that these moving averages have turned upward. RSI is above 50. We'd like to see this more bullish and inclining. While MACD stays above its signal line, we'd like to see the reverse of this with volume bullish on Monday, like we saw on Tuesday and Wednesday last week. REITs are outperforming. This is Alexandria REIT equities following through above the 200-day moving average. We had two very bullish candles last week on Wednesday and Thursday. RSI is moving sharply higher, but it does suggest it's not overbought yet. So we could see a test of this pivot, 162.27. If you're thinking about a day trade, look for the trade of the day setup for entries, exits, and stops. If we get through 162.27 this week with earnings as a headwind, we'd look for 174.48 in the weeks to come. As volume started to increase, we'd like to see all of our stocks doing this. If we're taking them to see above average volume, how would we know that ahead of time? by watching the R vol for each of these stocks. If they show up on the list, there's a good chance that we could see follow through. MACD's following through, showing momentum is with the bulls. Alexion Pharmaceuticals, many pharmaceutical names did very well last week, with the exception of Friday. Many of them pulled back a little bit, found buyers at the low of the day, didn't close at the high of the day, so that's a little circumspect. We'd like to see all of our closes in the upper half of the daily range, and for RSI to continue moving higher, stay above 50, and for MACD to continue supporting a bullish trend. Alibaba looking interesting. We had buyers on Wednesday and Thursday at the lows. We're above the 21-day. It's starting to turn in the opposite direction. We've got a 9 EMA cross. RSI needs to turn higher. The only problem with these Chinese names is that so many of them out there with potential fraud could hit the tape at any moment, so I'm kind of staying clear of these names in the short term. Alibaba is one exception, similar to the bullishness we're seeing in Amazon that David has shared with us recently in the trading room. Namely, that options pricing is showing traders have more faith in Amazon at the current time holding up than they do in the broader market. This anomaly never seen before in data that goes all the way back to 2010. So puts the 3-month implied volatility of the e-commerce giant below that of the S&P 500 ETF Trust, which is remarkable when you think about it. To repeat, options pricing is showing that traders have more faith in Amazon.com at the present time than they do the broader market at the present time. Amedisys, AMED is the symbol, following through. This is the kind of action I like to see, closing the upper half of a daily range. It's not too far from the 9 EMA, so this is probably going to test the highs. RSI suggests that we have more upside. MACD's above its signal line, showing bulls are in control, building taller histogram bars, and volume has been increasing. Look for AMED to follow through this week. Applied materials and other semiconductors, again running into moving averages and resistance overhead. Look for a follow through. Momentum is still very bullish. If we can see taller histogram bars and more bullish volume and less profit taking, we could get through the 200-day, maybe base there and then follow through. Something we'll be watching for in many of the semiconductor names this week. As we saw also with Autodesk, software, and the engineering construction related names, this ran into the 200 period moving average, got rejected. Profit takers came in. End of the week, RSI suggests we could see a follow through though. A move above the 200 period, maybe a consolidation, then a follow through, another wave up. This week, volume did increase. Wednesday and Thursday, MACD is showing bulls are firmly in control, thinking that we're going to push through this level on Monday. Box, the competitor to Dropbox, of course, looking much more bullish. The trend holding the 9 EMA, came up and tested the 200 period, didn't get through it. Could do it this week. RSI again suggesting another stock with the possibility of higher prices. We do see histogram starting to curve a little bit. Watching how price reacts on Monday and Tuesday at the 200 period moving average. Maybe we got a trade here to start the week. Bristol-Myers Squibb, another stock from the watch list last week. We had a 9 EMA 21-day cross. The 21 is going to cross through the 200 EMA probably this week. Bulls and bears are at an impasse. Maybe we test the 61.34 zone overhead. Another 2.5 points to go for a short options trade. Maybe we see some follow through. MACD showing histogram bars are taller. We just like to see more volume and conviction by the bulls this week. Costello Waste Systems, this one's following through. Keep an eye on waste management as well, which also had a nice follow through. This could see the 200 period moving average in the short term. RSI suggests more bullish price action to come. Notice the volume. That's institutions, folks. Looking for follow through. MACD did cross early in the week. Look for waste management to test the 200-day this week. Chegg, from previous watch list, purveyor of online and printed books and materials for students of all grades and college. Moving through the 200 period moving average, above the 9 and 21 day, both of them crossing last week. RSI is rising. Closing in the upper half of the daily range on Wednesday and Thursday, finishing off the week with a hanging man candle on above average volume, and we see MACD above its signal line, building taller histogram bars. Watch CHGG this week for a potential follow-through. Use your trade of the day setup for entries, exits, and stops. Copart following through. This company salvages vehicles and refurbishes them and then resells them on the market to help insurance companies cover their losses. Been on the IBD 50 every so often over the last 18 months to 2 years. While healthcare names from this group, Edwards Life Sciences, following through. Above the 200 period moving average, this either bases or follows through on a bullish candle on Monday. The latter is what RSI seems to be suggesting. No change in direction, trending towards the 70 mark. Most likely follows through MACD's above its signal line and rising. EPAM, another name from the healthcare group, looking for a follow through above the 200 period RSI, starts to rise. Looks more like what we have here with EW by midweek. That would probably be a confirmation that we're going to see a bullish follow through. Most of these stocks look like they're being picked up by institutions anyway. MACD's above its signal line and rising. Facebook, we had a couple of really nice trades on this one last week for more than 127, 130%. Many of you traded those on Tuesday, Wednesday, and Thursday. Congratulations. Looking for Facebook to follow through this week. Maybe test the 200 period moving average. People have to communicate with each other. They're doing it with Facebook, Instagram, Zoom, and many other ways for families to stay in touch. I would expect to see Facebook continue to move higher. Volume shows institutional size accumulation last week. RSI continues higher. MACD is above its signal line and rising, and MACD histogram is building taller bars. Look for Facebook to follow through this week. GoDaddy website hosting following through. Looking for a test of the 200 period moving average. RSI suggests that might happen. Only thing I don't like is that volume has been tapering off as it moves higher. So if we're thinking about a trade here, we at least need to see higher than normal volume. Again, you would see that on the R-ball list if GoDaddy shows up early on Monday. That would give you a heads up to potential follow through and conviction by institutions that volume should pick up to start the week. Look for that volume first and trade accordingly. MACD's above its signal line and rising. Houlihan Lokey, this one is in the mergers and acquisitions group. Mentioned this one 3 weeks ago when the thought crossed my mind that with the failure of a lot of small businesses, some of these bigger companies will be looking to scoop up some of these names. So the mergers and acquisitions departments of the major banks, as well as this particular company and competitors in the group, should continue to see more upside. We did see Wednesday and Thursday with buyers stepping up at the low of the day, as these wicks indicate, closing back up towards the upper half of its daily range on Thursday. RSI is above 50. Volume is starting to pick up and MACD is above its signal line. Looking for consolidation here, maybe a deep cup and a little handle. A breakout above 59.91 would indicate a continuation of the current trend. KLA 10 core, CLAC, KLAC, another semiconductor that saw a little bit of profit taking on Friday after a really nice run the last few weeks. If this starts to push higher, I'd expect to see AMD, LRCX, Nvidia, Intel, and other semiconductors also following through as a confirmation. And also keep an eye on LRCX. Kilroy Realty, another REIT following through, looking very good in this real estate industry group. A lot of stocks producing really nice waves up, short pullbacks, and then the next wave up would probably equal or be very near equal to this particular segment if we ran back up to the 200 period. A lot of times you see these ratio trades on retracements like we just went through over the last 3 weeks. So look for this leg up to test the 200 day as RSI suggests further upside before getting overbought in the short term. Kirkland Lake Gold, remember we talked about gold, how it was outperforming, breaking out above a multi-top as US dollar continues to move in a bit. Look for a test of the 200-day and a follow-through if you're interested in trading this. I know a lot of you have traded this in the past. Looking for RSI to continue higher. It suggests that we have more upside before getting exhausted. Volume was pretty pronounced on Thursday. MACD's above its signal line and rising. Lumentum looking for a follow-through, 9 and 21-day cross. Volume increasing, showing institutions are picking up shares. RSI suggesting we could see further upside. Microsoft looking for this to follow through as well. If I overlay the 50-day, you'd see it was right underneath price action. These wicks indicate buyers stepped up at the 50-day. Look for a follow through and for RSI as a function of price to tilt higher. Got a 9 and 21-day cross, prices above both, and the 200-period moving average. Volume increasing and MACD's above its signal line, showing that bulls are in control. Netflix looking for this consolidation, this little pullback, which I tend to like quite a bit. When we have a trending situation in the moving averages, the 9s above the 21-day, these pullbacks are the opportunity. Once you see the reversal candle, the safer entry is the second bullish candle. Getting long as it breaks through previous resistance, you've got the 9 and 21-day just below as your stop mechanism. I'd like to see higher volume and MACD continue higher. Starting to fade a little bit on this little pullback. Not to fear though, because we are looking for pullbacks to get supported. We just need to see confirmation. A bullish day on Monday would indicate we're probably going to see a follow through on Tuesday, while RSI will turn up as a function of price. Nvidia, another chip stock, we're looking for follow through above the 9 and 21-day, 9's above the 21-day and rising. All three are above the 200 period and RSI is above 50. Look for momentum to continue. I'd like to see more volume in Nvidia going into earnings. PCRX following through above the 9 and 21-day. Nice bullish day on Thursday to finish the week, closing in the upper half of its daily range. Look for a follow through. Most likely going to see that RSI steeply sloped higher. This is probably a good bet for a follow through and a test of the 200-day in the short term. Pharmaceutical companies have been doing very well, populating most active lists. MACD's above the signal line, histogram is taller, and we want to see more volume to confirm. Again, use the RVol list to check this name. If it shows up, it's a good indication that we might see a follow-through on Monday. Paylocity had really nice volume last week, RSI rising through 50, MACD above its signal line and rising. Look for a follow-through this week. Qualsys following through as well, breaking out. This is from previous watch list. RSI is rising. If you're still in this, I'm looking for a flag and a follow through, another wave up. Volume suggests institutions were picking up shares and MACD's above its signal line, showing bulls are definitely in control. Quidel also from the previous watch list looking for a follow through, pushing off the 9 EMA and 21-day last week, finishing in the upper half of its daily range. Regeneron Pharmaceuticals, another pharmaceutical name, following through, trending along the 9 EMA. Every time it tested the 9 EMA, buyers stepped up over the last 3 weeks. As we rise, RSI will turn back up as a function of price. I'd like to see higher volume if you're thinking about trading this one, and MACD above its signal line and rising. ServiceNow, another name that's testing the 200-day that could conceivably move above same and RSI rise through 50. Look for a follow-through MACD above its signal line and rising. SolarEdge, a lot of people watching this name. 9 EMAs crossing back up through the 200-day. Prices above all of the moving averages. RSI is rising through 50, most likely continues higher. Higher lows, higher highs, MACD above its signal line. While we watch for volume to start increasing again, showing institutions are picking up shares with conviction. Toro Company looking for a follow-through, 9/21-day, going to cross. Look for a push higher. RSI will start to rise as a function of price. Volume, canceling out what we saw on Wednesday on this little pullback. A push off of this level would potentially lead to a test of the 200-day in the short term. MACD's above its signal line and rising. TransUnion looking for a follow-through. Viva Systems trending, 9 EMA, price action, and 21-day. RSI is above 50. Look for a test of this multi-top area, right around 169 to 170. MACD is above its signal line. Volume should increase to start the week. Zoom Video testing the 21-day moving average had some issues last week with security. Maybe that's been taken care of. If volume picks up, that's telling you institutions showing conviction. That's something you want to see. If it does get above the 21-day, perhaps we continue this move higher. Not crazy about this very large range that it trades from week to week, but this is the better area to be trading it, not buying it up here with a potential for a pullback. If you do start some trades on Zoom this week, just make sure you have tight stops, look for a follow through. Start it with a day trade mentality and then swing some if it closes in the upper half of its daily range like it did on Thursday. Then look for more follow through on Tuesday and Wednesday. MarketSmith showing a lot of names on the relative strength scan. If you are a MarketSmith member, just go to the track screens and click on relative strength line at new highs during the market correction. That'll give you this list. There are 8 names, some of these from the IBD 50 that should see follow through, while stocks from the 100% volume screen will give you names like Inseego, which had really nice volume last week with earnings out in the first week of May. Look for many of these names to follow through as well. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for April the 12th, 2020. Look for the watch list to come out later tonight around 11:30 on the East Coast, 8:30 on the West Coast. Otherwise, I hope this helps. Have a happy Easter and happy weekend. Take care.